afternoon to you. Let's take a look at the markets. Asian stocks traded mostly higher today. This as market players awaited the ECB, that is the European Central Bank's monetary policy decision later today, and digested the economic impact of the trade war initiated by the Trump administration that came through in the latest global PMI data. Other data awaited is that of the US non-farm payroll out on Friday, that is tomorrow, which will help inform what the US Fed's next move may be in terms of interest rates. The Nikkei share average declined by 0.51%. The Hang Seng Index rose by 1.07%, while the Shanghai Composite Index ended the session up 0.23%. US markets were mixed at the close, although they're teasing highs despite trade tariff drama. The imposition of the 50% tariff on imported steel and aluminium, which affect most of its trading partners with the exception of the United Kingdom, which stays at 25%, is expected to hurt the US economy, as it's the consumer that will have to incur that higher cost. Also, the latest ISM Services PMI data showed that the sector contracted in May. That's the first time in nearly a year, while the US dollar index continued on a weaker tone, meaning that the US dollar is declining relative to most of its trading partner currencies. The Dow Jones Industrial Average declined by 0.22%. The S&P 500 edged up by 0.01%, while the Nasdaq Composite Index rose by 0.32%. Looking at the local indicators, we see that the all-share index is up 1.1%. The market is looking very good today. It's at 96,737 index points. The rand also firming against major currencies. It's at 17.75 vis-a-vis the US dollar, 20.29 against the euro, and 24.10 against the British pound. Gold is trading at $3,392 an ounce. That's also up. Platinum also up at $1,128 an ounce, while Brent crude oil is trading just above $65 a barrel. Well, let's get into it with Ricardo Smith. He's the Chief Investment Officer at Absa Investments. Thanks very much, Ricardo, for joining us. So global valuations are generally higher, and yet there are still very negative developments as well as uncertainty around US tariffs, and the US dollar is declining relative to its major trading partner currencies. How do you interpret all of this? Is the volatility now behind us?
Afternoon. I wouldn't say it's behind us, but there is elements of it that have dissipated a bit. For instance, we're not at the realm where we were with those reciprocal tariffs, having been largely suspended. There is still some uncertainty. We have seen a bounce back in US markets, predominantly in the tech sector. Looking at the Dow Jones, there's still a bit of difficulty in terms of the local manufacturing industries, as still navigating some of those steel tariffs. One thing that I suppose markets have been seeing as a positive is President Trump's big, beautiful bill, which predominantly looks to support the local economy from a fiscal spending perspective, including quite a bit of tax cuts. So there's quite a lot in it, not out of the red yet. We do think that a lot of the erratic policy behavior is negatively impacting the dollar, however.
Yes, you talk about that big, beautiful bill, which speaks to the U.S. tax and spending bill that was put through very narrowly by the House and now has to be decided on by the Senate. What are your expectations around that? Because I see even the likes of Elon Musk, who is very much in favor with Donald Trump, has said, speak to all your, representatives and make sure that this bill doesn't get passed, because there's a concern about debt levels in the United States.
Yes, it's a long-standing concern, and they are approaching their debt ceiling again, and so quite a lot of policy discussions on the table. I think certainly from the start of the year, the talk has been cutting spending, becoming more efficient, et cetera, et cetera. But at the back of this, we were aware that President Trump rather is pro-tax cuts. He is pro-lower regulation. And so the question really is, where do you cut and where do you spend? And it's unlikely that he was going to reverse that stance in terms of reducing cuts and increasing spending to the local economy. And, he's experienced quite a lot of negative sentiments from the markets. And so potentially implementing something that is seen as positive from a market perspective, although from a government debt perspective, it does remain a bit questionable.
Yeah. European Central Bank, they're set to make a decision on interest rates. The expectation seemingly that there might be a cut of about 25 basis points. What's your expectation and how are you seeing that economy, especially in light of the increase in the aluminium and steel tariffs?
Yeah, look, I mean, the US is one of the major, trading partner economies there. But if what we've seen from a tariff perspective is go in hard, negotiate, defer some of them and reduce some of them, it does seem to be more of a negotiating tactic from that perspective. From a rate cut, we do anticipate the ECB to continue on their cutting cycle. Their inflation has been behaving well, with the latest print surprising positively, coming in within their 2% target. And they had not great growth necessarily, but stable economic growth in the region. So all roads really pointing towards a rate cut for the ECB.
Yeah. So the Reserve Bank has come out with our current account of balance of payments number for the first quarter, showing that we registered a deficit of 0.5% relative to GDP. It's not really much of a change from what we saw in the fourth quarter of 2024. Tell us why this number is important. Why should we care?
A lot of reasons to care. The one is, currency strength from our perspective, as well as our foreign holdings in terms of our GFRECA account. It is quite significant. So, it isn't a big movement. We did see the trade surplus declining slightly, with imports increasing by more than what exports increased by. We did see, some positivity around personal services and the likes. So not a huge move, at this point. So not a lot in it, but not really, contributing as positively to GDP as we saw those numbers coming in a bit anemic at 0.1%. And actually the only strong growth point coming in from consumer spending, which in itself is unsustainable because our unemployment levels and confidence levels are a bit sideways at the moment. And so we would look to be exporting a lot more, contributing more positively to GDP and, buffering our foreign account holdings.
All right, Ricardo, thank you so much for your time and insights. As always, that was Ricardo Smith. He's the Chief Investment Officer at Absa.